Good evening, guys. Good afternoon, good morning, good night, wherever you are in this world. This is Merchant Trader FX, Merchant Trader FX channel. So far, so good. This is Solana USDT. This is Solana USDT. Um, I'm expecting to buy here. Previously, I bought this from this level. These green lines that you are seeing, they are key levels. They are not support and resistance. They are key levels. Some call them psychological level. But the way I plot them is completely different from the way other people plot them. Yeah, so I bought Solana this morning. Today is Sunday. From Bybit chart. This is Bybit. So I bought Solana. I was expecting price to hit the TP, but price did not. So when it starts to reverse back, I book my profits. Now I'm expecting price to come back to the same key level. If I see any rejection candle around here, I will buy, and this is going to be my target. This is going to be my target, which is 1,000. Sorry, 135 dollars. So if it breaks and continues to go down, this is going to be my next key level where I will be buying. I'll be buying from here, which is 125 to 130 dollars. So far so good. This is lower time frame. This 15 minutes time frame. I will be. Let me look at the higher time frame. This is higher time frame on Solana 1 hour higher time frame. So the key levels on higher time frames, they are 20 $25 interval, $25 interval. So I'm expecting price to buy from here and go up all the way up. But since last week, Solana has been consolidating uh, from this within this level here, within this level. So price might liquidate this level here. Price might liquidate this before shooting up or continue shooting down. Okay, so this is my expectation. Next week is my expectation. Solana is going to buy, but if buy doesn't happen, price might come and retest to the key level here and started buying or continue to sell or continue with the ranging as the way it is ranging here since the last week. The whole of last week price has been ranging in this zone, in these two zones here. So this is resistance. uh, this is resistance. This is resistance here. There's resistance here. This used to be support. Now it is resistance, and this is the support here. So price has been ranging between this support and this resistance. So these gray lines, they are not support and resistance. They are key levels. They are key levels. Okay. The difference between support and resistance is that support and resistance, they are found everywhere in the uh, market. They can be spotted everywhere in the market. For example, this is support and this is the resistance. This is the resistance here. You see support, 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 support. Price breaks it and it becomes resistance. Support, support, support. So actually, I don't trade support and resistance. I don't trade that. You know, I am a merchant trader. I follow the price movement, the direction. So the difference between support and resistance and the key level is that key levels are equal intervals and they have fixed positions. While support and resistance can be found anywhere in the chart. This also, look at this. This minor zone here is either a support or resistance. You see, there's here it is resistance. It becomes support, resistance, and now it can become support also. So, but I don't trade support and resistance. They are good, they are very good strategy, but you know they make your TPs to be so short. So that's why I don't trade them. Yeah, because support and resistance can be found anywhere in the chart. This one is also support. This support here is support. So if you are to plot supports, you'll be plotting a lot of them. So that's why I don't use them. I use key levels instead of support and resistance. Yeah, key levels are not support and resistance. They can have support and resistance within them. For example, this key level has support and resistance on it. This is the support and resistance here. It has its own support on it, but key levels are the discount and premium that a retailing trader must follow. For example, the concept is very easy. For example, if a merchant wants to buy particular groups commodities from suppliers, he must have a price tag. He would say that if the price comes to this amount, I will buy this good. But if the price exceeds this amount, I will not buy this good. The same concept is here. For example, between key level to key level is $25 discount. Let me type it here. You see $25 discount. This is $25 discount. Okay, on Solana. Gold, the same thing. Gold also has $25 discount, but in smaller time frame. This is higher time frame for Solana. From this here also, from this key level to this key level, is also $25 discount. It's also $25 discount. The same thing to this. This is $25 discount. Okay. So for me, I buy from key level. For example, look at this. This has a discount of $50 because this from this move to this move is $25. From this move to this move is also $25. So in total, this move is $50. Let me put it here, $50. This entire move is $50. Okay. So that means from here, this date, 23rd February 2025 on Sunday, from here we had a discount of Solana, $50 discount up to this here. This is on February 25th, Friday. That means the whole of this week we were having a discount on Solana. So once I saw the price, $50 discount on the price, what I'm going to do, I'm going to buy from the key level here. Okay, I'm going to buy from key level. I'm explaining my concept. So I'm going to buy from here, put my stop loss below the key level, target $25 premium. Okay, $25 premium. So this $25 from here to here is going to be my target. Okay, this is my strategy. This is how I do it. So if I see price breaks this candle was moving very fast, but if I see price breaks it and close and retest here, I will buy another $25. I'll buy another $25 and my target will be on this. You see? So since this move is $50, we had $50 discount and we have $50 buying or premium. There's also $50. $50. Yeah, this is $50. $50 here. So that means we need more discount again for us buyers to come in, because trading is between buyers and sellers. This is a premium. This is also a very big discount for sellers. That's why they can enter the market. They sell all the way to another $50 or more. This is more than $50. This is also $50. You see, $50 discount, 25, 25. Okay, $25, 25. So buyers see that, you know, the discount is enough. That's why buyers are trying to come in. If the sellers are not done, we could see another additional $25 discount. We could see another $25 discount here to this level. So as a retailer trader, what you are looking for, you are looking for an edge in either on the buyers or on the sellers. So right now, since last week, the market has been consolidating. There is no edge on either on the buyers or on the sellers. Sellers are not stronger than the buyers. Buyers are not stronger than the sellers. So, but I'm expecting price to buy from here to back to $150 key level, or buys to this level here. Buys to this level 175. But price can also drop from this level all the way to $100 or continue dropping to this to $75. So that means we are going to have $50 discount. Then we can buy from there. We can buy from here. We can also buy from here to this level, or buyers can continue buying. So if the price breaks this and the price is below the moving average, it breaks the key level, the target might come here. This might be the target. We are going to have additional $25 discount. So it's going to be drop based drop setup, like in other book concept, ICT concept and all. I don't use them. I don't use other blocks. I don't use mitigation blocks. Okay, this is higher time frame. So let's come to lower time frame. So right now, our market is open for Solana on the in Bybit, but it is closed for forex trading, forex.com and other brokers. So this is my gold chart. This is my gold chart. You know, I was explaining it in one of my videos that gold also has $25 discount on 15 minutes time frame, lower time frame. Discount 25, 25, 25. So this is going to be 75. So many traders, they trade the candlesticks. So real trading, we don't trade candlesticks patterns. We trade the price. We are trading the price. Okay. So many people think that these candlesticks, they are the actual price. No, they are not the price. They are indicators. Candlesticks are indicators, just like these lines and just like moving averages. In one of my videos, I was explaining the difference between key levels and the support and resistance. That's why I drew this, showing people that this is support, this is resistance, there is resistance here. But key levels are not support and resistance. Okay, they are discount and premium levels. As a trader, you must have a discount or a premium level. You say that if gold drops at every $25, I will be looking for buys. Guys, be careful. Know that this concept is, I am the first person to explain this concept right now. Exactly. This concept, especially on gold. If you understand this concept, you will have 80% win ratio, win to losing ratio. This strategy works at 80%, and it also helps you to control your psychology. For example, you know your losses, you know where your stop loss are. Stop loss are always below the key levels. You know your TPs are always at the next key level or the second key level. Okay, so you always know your TP. Okay, this trade stopped me out. I got losses here. One thing for psychological part, losses are part of the trading. This is my Funders Next account. I'm trading my Funders Next account on this. Look at this. I started trading my Funders account here with these two trades. Not all this. These were my real account. I traded this. I've been using this strategies more than a month. More than a month. Now it is 1 month or so old. This strategy. So I developed this strategy by myself. It is called merchant trading strategy, because for me ICT and SMC concepts, they don't work for me. Demand and supply, they don't work for me. Supports and resistance, they work for me, but very little. Very little. Support and resistance is good, but demand and supply is not good at all with me. I'm not saying that it's not good at all. It is not good with me. It is not working with me. That's why I don't use support and supply and demand. I don't use trend lines. Trend lines. The reason I don't use trend lines, already I have a trend line, automatic trend line. That is moving average. Moving average. Many people think that you know they are just lines. No, they are trend lines. They show you the trend direction. They show you the trend direction. This is moving averages. So this one is moving average channel. This one is moving average channel. You can see it here. Let me zoom it. Moving average. Why this I? Okay, moving average channel. So for this trade, I had this trade. I sold gold. I was telling people that gold is going to sell at this level here because of it is below the moving average and it's creating a curve, semicircle. So I sold here. I got out around here. The price could not get to this key level. If that happens, that means this is liquidity. Anytime you see price sold from one key level to another key level but could not get to that key level, is liquidity grab. So gold had been consolidating on these key levels here for like a week or so. It couldn't break in either of the key levels. But once it liquidates this area, know that this liquidity uh, once the liquidity is grabbed, so gold is going to take all the way up. So that's why sellers could not get it to this key level. So I was expecting price to come back to this level here, but price never did. It came little bit and it continues to go up. So I bought here, but I knew price would go to 3,000. Gold will go to 3,000, but for some reason I closed my trades around here. I closed my trades somewhere around here. So I should have kept it all the way to 3,000. So this trade was a clean trade, but I missed this trade totally. I entered this trade. It was very good since gold is a bullish trend. Once price gets to this below this support here, I see wicks candles that are wick. They are producing wicks. Then I close all my position. I got out. So here also TP could not be hit because sellers cannot push the gold to this key level. So that means buyers are going up and up. So that's why I wanted to buy from here to here, but I missed this trade. But I got this trade. This was a good trade. Price came here, come to my entry level. I didn't. Then another reason I don't break even most of the time. I leave my stop loss and my TPs the way they are initially. So this is for the price if it comes back to my entry, so that it will not take me out of the trade. I will still be in the trade. So I kept myself in this trade and TP was hit. I saw this trade. This one is a clean, shit, wonderful waterfall trade. Anytime you see price falling, I call them fallen knife. Exactly from here, if you look at this is price fall. You see 3 or 4 candles, they drop down completely. If you see that any time in the gold, know that it's going to the opposite. Once the price gets to the key level, opposite direction is eminent. For example, there must be buy here. If price falls like this, exactly the same thing. Price hit my TP SL and it falls all the way down to another key level. That was when I saw this. Immediately I buy from there because I know that this is fallen knife candles. They fall straight. Look at how straight these candles are. So anytime this happens in the market, know that the next key level is going to be opposite. So it's going to be buyers are coming in, buyers are stepping in back to the where the price came from. So in forex market or forex chart, it is not allowed for price to drop like a fallen knife, just like that. It is not allowed. That's why anytime price does this, the opposite, it must have opposite reaction. So this is one reaction. There must be opposite reaction. So this is the opposite reaction. So I bought from this key level. I got out somewhere around here because it was Friday. Because prop farms they do not allow weekend trading. So I got out. So my TP is about to be hit. So overall, I'm expecting sales on gold. I'm expecting sales on gold. If I come to the higher time frame chart frame on gold, this is gold. You know, I'm expecting price to go back to $3,000 key level, $3,000 key level before it continues to go up, or it might even go all the way to 2,975 or to this level here. So sometimes this is what I do. I put this thing here. I put these arrows here to indicate that price might go all the way. This is a possibility, probability, high probability direction. So price might go drop all the way down here before buying because buyers needs discount. Yeah, we need discount. I had this discount already, so I'm waiting for another discount here, or here there could be another discount. This discount could be enough for buyers to step in and buy all the way to 3,050 or $3,100. But I'm expecting more discount from gold, so that we the buyers here, we the buyers can buy from this level to this level or higher. So that means, let me put it here, high probability. This is high probability. Okay, we can continue buying. Okay, some might say that I should change this color to red. Yeah, it will be nice in that too as well. So this will indicate that I'm expecting price to fall. So I'm expecting price to fall next week, Monday, 24th March 2025. I'm expecting price to fall. You see, okay, from today is Sunday, market is going to open. So I'm expecting price to fall down here to this, or to this level, which is $2,900, $2,900 or 2,950 price. I'm expecting price to come all the way there for buyers to come in. So then I will be expecting buys from this level, or any of the levels. So there is my expectation so far. So buy will continue from here, either here, or it will drop all the way here, or it buy will continue from there to this level. So we are merchant traders. Okay, for me, I have my price tag. I don't wait for too many confirmations. If I see price goes to my target is on this 2,950. That is my first buy target. If the price continues to go down, it's going to be 2,900. 2,900. That is my target for me to buy. So I'm going to be buying from there. But this is higher time frame. I don't use higher time frame to buy. I use 15 minutes time frame. This 1 hour is equal the same as 4 hours. If I put here 4 hour, the same thing. I'm going to have the same discount. I'll be having the same discount. So I don't mind. So I know this is going to drop down for further sales, because we have a very good buy. So we have a long premium move here. This is a very long premium move. So we need a very long discount move. Gold can come all the way. Gold could come all the way to this level here. All the way to this level here. To this level, which is 2,800. But I don't expect that anytime soon. Gold will do that. Gold would do that. So I'm expecting gold to come 2,900 or 2,950 or 3,000 and started pushing up. Yeah, but as buyers, we need discounts. For example, this is a good discount. From here, this is 2,950 to 2,850. So it's a good discount. So now we have a very good buy here. So in 4 hours time frame, but I keep my time frame on 1 hour only. Okay, since I have my key levels. So if I come to lower time frame, that's why I'm saying that I'm expecting a sell here. So there's a loss, risk. My risk management is very important. It's very important. It's very important. So what I do, like, every $100 is $100. Look at it. I don't do risk management only on my entry position, but I also do risk management on my account. Traders, you have to listen to this. Risk management is very important. It's the key to success in forex market trading. You have risk management. Two risk management. First thing, when you are entering your position, you have risk management where your stop loss will be and where your TP will be. That is risk management. Because if you don't put your TP, price can go to your direction and come back and wipe out your account. That can happen. That's why you need TP and you need stop losses. Okay, that is for your entry position. But you also have risk management for your account. Many people don't know this in forex trading. You must have your risk management in your account. So if your account is $100 for gold, you are trading gold, you start your account with $100. Let's say $100. From, let's say, even $50, $25, $10 to $100, your positions from 0 to 100, your position will be only one position. But if you start your account with $100, you will start with two positions. Two positions. Always maintain these two positions for the rest of your trading career. Don't add positions. Don't add position. Only two positions. Anytime you are entering, buying gold, enter only two positions. This is for risk management. Enter only two positions. So your lot size must be 0.01 each position. Your lot size must be 0.01 for each position. If your account grows to $200, you maintain the same two positions, but you will increase your lot size to 0.02. 0.02. If you grow your account from $200 to $300, you still maintain your two positions. Your lot size, you increase it. You scale it up to 0.03. If your account is $400, maintain two positions. Your lot size would be 0.04. If you will continue with this until up to 100,000, 1 million, whatever you want your account to go. Okay, so for gold, you don't have to calculate the pips because I'm a key level trader. Key level trader is the same as a merchant trader. If I have my discount, if I enter here, automatically my TP is here. There's no doubt. If I buy from here, automatically my TP is here. No doubt. Okay. So from here, from the key level to key level, 0.01 lot size is $25. From if you buy gold from 3,000 and you sell it at 3,025, is 3,025 with a lot size of 0.01, you will get $25 as your balance. Your balance will increase $25. Two positions, like this is $100, this is two positions. If you buy gold with two positions, you will have $50 in return from this key level to this key level. So that means your balance will increase from $100 to 150. Sorry, my phone just fell down, so I was speaking that. So it will, this $50 will be added to this 100. You will have 150. So if you had another trade which is you enter somewhere not exactly on the key level, but you enter somewhere around here. Let's say around here, and your TP was on the key level. Sometimes you will not get price exactly on the key level. That means each position of this will be at least 20, let's say $21 or $20. So 20, you have $20 from here. If you buy from here, you have $20 each position. That is 40. So you add 40 to your 150, you're going to have $190. Okay, $190. Then if you get another trade and you got $50, another trade you got $50, exactly $50, your account will increase from $240. Now if your account gets to $240, it's above 200. This is what I'm trying to get at. It's above these $200 now. So your next trades, you are going to increase the lot size to 0.02. Your next trades, you're going to increase the lot size to 0.02. I repeat, 0.02, because your last trade you got $50. Your account balance is now sits at $240. So you're going to increase your lot size from 0.02, from 0.01 to 0.02, because it's above or is equal to or above $200. So that means if you buy from key level to key level, from this key level to key level with 0.02 lot size, instead you get $25, you will get $50 each position. That means you are only going to put two positions. Okay, so this is going to be in total 50 plus 50 is going to be what? $100. Okay, $100 plus $240, we are going to get $340 just in one trade. So if you get $340, you are going to increase your lot size to 0.03, because your account balance is more than $300. So you're going to increase your lot size to 0.03. This is goal. I only use 15 minutes time frame. I don't use any other time frame on this chart here. I have two browsers, two accounts with TradingView. This is my other account. This is my other account. So I use Chrome for higher time frame. I use Opera for lower time frame. Higher time frame is 1 hour. 1 hour. Lower time frame is 15 minutes. From this, I don't change the time frame at all. From this, I never change the time frame. My time frame stays 15 minutes. Okay, so let's come back. Now the account sits at 340. Let's say it's $340. I'm going to increase my lot size 0.03. My next trade, two positions. Okay, if I put my position, I buy from here to here, this is going to be what? $75. I'm going to get $75 each position. $75 each position. Okay, I'm going to get $75 each position. So that in total, I'm going to have 150. This 150 plus 340. That is going to give me $490 sitting on my my account. Okay, so what I'm going to do, I'm going to increase the lot size. Since we are at 490, I increase the lot size to 0.04. instead of 0.03. So this is how I do it. This is how you do it. This is how you scale up your account. Your stop loss is not constant. TPs, they are constant. Sometimes price will go in the midway and reverse back and hit your stop loss. For example, if I buy from here, price can go to my direction in the midway and comes and breaks the key level and hit my stop loss. So what you do, you break even. For me, sometimes, most of the time, I don't break even. But if you want to protect your account, you can break even here. But this strategy, you should not take partial trades. Do not take partial trades. Okay, break even. For me, I don't break even. I accept losses. Losses are part of the trading. I accept the losses. So that's why I don't break even. I leave my trade as the way, because sometimes trade price will come to the entry, to the key level, and the key level will push it back. The same thing happens here, you see. The same thing happens to my this here. Price, I entered here. Price came back to the entry. If I break even this entry positions, that means I'm going to got out from the market before price finally goes to my direction and hit my TP. So that is the reason I don't break even. I normally leave my trade running. I leave them running. I wait for TP or SL to be hit, because this strategy is 80% win to losses ratio. It has 80% winning rates. So I don't mind that 10-20% loss. I don't mind about that, because the risk management I do on the account is very viable. It's very good. It's very good. I got out from this position here because of it was on Fridays. I don't want, you know, to for my Profam account to close my trades, automatically. So I close them. I'm waiting for Monday. On Mondays, then I will find another setup to enter. So I'm expecting gold to sell to this level, back to 3,000, or even to 2,975. So I'm expecting that. So this strategy has 8 wins out of 10. It has 8 wins out of 10. That is very common. The winning ratio is very high. It depends on you. Okay, so your stop loss, mostly $6, $9, $10 with 0.01 lot size. 0.02, as the TP is increasing, stop loss also increases. But stop loss is mostly 1:4, 1:2, 1:3 risk reward ratio. Yeah, this one is 1:1.88. Yeah, 1:8. That's why my stop loss was big here. But if not, you look at this trade is 1:4 almost 4. Risk to reward ratio 1:4. It gives me 1:4, 1:4, or 1:3. So this is a very good trade. You see, this is 1:3.3 risk reward ratio. So it's a very good strategy, and the winning rate is like 8 out of 10, 8, 7, 6 out of 10, or even 9 or 10 out of 10. That can happen in the market. 10 out of 10, you can get 10 trades, all of them will win. You can also get 10 trades, you will have 8 winning, 2 losses, or 6 wins, 4 losses. It depends. It is not constant. It depends on the market, because market tends to consolidate for like 40%. So far so good. This is it, guys. This is it. I will be uploading more videos on YouTube. So if you have any question, you can write it on the comment section. I will explain more. I will explain more about the key levels, the moving averages, and also the reason I buy and sell. Yeah, this is gold chart, and also I have BTC USD chart. I have only four pairs: gold, BTC USD, S&P 500, and Solana. So these are my. I don't trade currencies. Currencies, they are mostly manipulated. Yeah, so I'm expecting BTC to come to this key level, break it, then I will buy, or it breaks below, I will look for sell. So the same strategy, BTC has interval of 2,500 between key levels. So my losses losses are part of it. Really, my stop loss was hit here because I entered here. I could close this halfway, but no, I leave it open. I don't break even here. Losses are part of trading. I was very much okay with that because of my risk to reward ratio. So this was okay. Look at this trade. This trade was very good. This trade also was very good. This was a sniper entry. I missed this out. I missed this trade. I missed this trade here. I missed this entry. Stop loss was hit here. I bought from here almost to TP, but stop loss was hit. I think I break even on this. I hope I break even one of them, but I don't take partials since my positions are only two. So I let trade to go to my direction. So this one I took TP here. I took TP here instead of this. So I took TP here. Yes, instead of this. But that was my drawing, so I always leave my drawing. I don't change my drawings, so I left them like that. This one I was stop out, then price came in, I sold again. You see, I sold from here, stop out. Then I knew that very well price is going to sell. I sold from here. I took my profit somewhere around here at this level here, this level here. I sold around here, took my TP from here, but I don't put that drawing here. I bought from here, I sold here. So because this is a fallen knife, it's a fallen knife. I told you if there is fallen knife here and price gets to the key level, you have to buy. This also fallen knife, you see, fallen knife. Price breaks this key level and comes to this key level, buy from there because fallen knives are not accepted in the market, in the forex market. So once fallen knives happens, reversal is imminent. This reaction, this is a tremendous reaction. There must be opposite reaction to it. So market does not like price to fall down like that. So that's why there's a quick and sudden correction, very quick and sudden correction. The same thing happens here. You see this price rose all the way to this key level here and price drops back. So this is a sudden reaction, and there must be opposite reaction. So I bought from here, I got out. I bought here, got out, sold here, got out. So you can buy and sell at the same time in the same position. I bought here, I saw that this is a key level. I sold also, but price almost took me out. If it is some broker, they would have taken me out because the spread, because of the spread. So, but anyways, my broker was good. So I got this. I got this trade here. I got here. TP was it. This trade was very good. So after that, I took a break. So I don't look at this. So, but when I came back, I saw this price was going to this. I know that price was going for this TP. I got in all the way to this level. I was waiting for price to. I saw this. I should have entered here, but I said, wait, let me price retest a little bit, then I will sell. Look at that. If I had this trade here, it will have been a wonderful trade. but I could not take this trade because I was waiting for price to come back and retest a key level. So I should have entered here, but I didn't. So I lost this trade, the whole of this drop. But I got this one here, from here to here. I went almost full margin on this. I knew very well this will buy, so I went all in on this. I got most of my trades out here, so I got stop out from here immediately. Then I enter again, but I don't put this draw in here. So this is it on Bitcoin, BTC USD. So next week I'm expecting price to buy or sell. So let me remove these drawings. Yeah, let me remove them. I like my chart to be clean. I don't like my chart, so let me remove this one. Let me leave this one now. So if the price comes to this, that means I'll be looking for sell here. I will be looking for sell, or I will be looking for buy in the. So I have to look at BTC in the higher time frame. Let me go to higher time frame for BTC, BTC USD. Okay, BTC BTC is around the premium. It's around the premium. It's not at the discount. So we had a discount. You see this waterfall, fallen knife. I sometimes call it waterfall or fallen knife. Look at it. Anytime price does this and it goes to the key level, it buys. Okay. So Bitcoin drops. The discounts was given all the way to 80,000, and it goes beyond 80,000 but could not get to 75,000. It stops somewhere around before this key level. Know that it's going to buy. So this is going to be this higher time frame. I don't buy in higher time frame, only smaller time frame. So this target, the target is always on this. It's always on this. So I put the alarm there. You see the alarm is here. BTC closing 85,000. So the buyers could not continue with the buying momentum to this level. So buyers buy from this discount to this premium, which is from 8,000 to 8,200, 80,000, 80,000 to 85,000. So they cannot continue to 90,000, 90,000. So sellers, they step in. They still now. BTC is more of sellers. So in higher time frame, we are expecting price to come back here. There's going to be a head and shoulder pattern, or price can come here, then it drops, or it can continue to go up. So anything that price does, we are ready for it. If price wants to buy, it's going to buy with it. If it wants to continue to drop down back to 80,000 or to 75,000, we are with it. We are with it. So we are always with it. You see, this is a fallen knife. Market does not like this. Does not like this. So there must be a opposite reaction. So Bitcoins has been selling from 800,000 to 95,000 to 90,000 to 85,000, then 80,000, and it is consolidating around 80,000 and 85,000. So Bitcoin is in consolidation right now. So next week I'm expecting price to buy or sell. This is not clear. This is not clear. This coming week, I don't know. I'm not sure if it is going to sell or if it is going to buy, but it is not clear. But if the price is above this moving average, and this super trend is green, then we can expect more buys. But if this super trend becomes red and price is below the moving average, we expect more sales in the coming weeks. Coming week, that is next week. That is today. This week, let's say this week. So we are expecting more either sell or buy. Anything can happen in the market. Anything can happen. Anything can happen. So let me put this thing here. Anything can happen. So this is the higher time frame for Bitcoin, and this is the lower time frame for Bitcoin. So far so good. This is what I am expecting. So I will wait for the market to open. Bitcoin is open for Bybit, but it is closed for Forex market. So I have to wait because some of my accounts are on Forex, not on Bybit. This is my Bybit account. I only trade Solana on Bybit. Yeah, so I'm expecting price to buy from. It might not reach this key level. It may continue. If it is above this, I will not buy because this is far above the key level. So I will not buy. I will not buy from here. I only buy from key level. So once price is somewhere around here, I don't enter. So I have to wait for price to come and test this key level, which is $135. Then I will buy to 140 or sell back to 130. So that is what my entry is always around the key level, not in the middle. I don't enter in the middle. So thank you. So far so good. This video is long, so I will stop here. This is my first video so far on YouTube. Thank you very much. Stay in profit.